You could call it a big movement day in the markets. Let's get right to today's action. Tom Lydon, he's Global Trends Investment President. He'll tell investors how the European Central Bank's much lower interest rates, now nearly zero, will impact portfolios and any decisions people are thinking about making. Chris Retzler, Needham Growth Fund co-manager, says investors cannot let this market pass them by. He has two plays for us. You've got to hear them. And Ashley Webster with us live from the New York Stock Exchange, along with Dan Stesich down at the CME. Dan, I shall begin with you. Again, a big movement day, but, at the end of it, it was full of sound and fury, signifying very little.
Right. We saw some really good economic numbers out of the ISM index today. I love that number. It's an independent survey, and I think it justified the move. And then I saw this thing falling back. I said, what's going on? I scrambled to some news services to find it. And the Cleveland Fed president, Loretta Mester, came out and said she expects 3% growth for the second half of the year, unemployment to go down to 5.5% next year, and people are taking that as higher interest rates. I don't think that'll be bad for the long run, but in the short term, it happened exactly like I thought it would when people talk about higher rates.
Tom Lydon, let's talk about Europe and specifically what the European Monetary Union did today in weakening the currency over there. A weaker currency for Europe, by the way, means it's more difficult for U.S. corporations to sell to Europe because it makes our goods more expensive. So why would that be good for the U.S. in any way, a weaker euro?
Well, for investors, David, it's great for European companies. Obviously, lending rates lower. You can imagine this is something that we went through 3 years ago. Should do very well. However, you've got that currency hedge that you need to consider. If you look at WisdomTree's hedge equity, European equity ETF, it was up over 1.5% today compared to most European ETFs that were actually down. So that's one key thing as investors think about the dollar going higher as we have rates going to the upside, rates going to the downside over there in Europe. That's going to be a big component for that global allocation in your portfolio.
Yeah, global allocation, but what do you pick and how? Chris, it made me laugh when we said that you said, do not let this market pass you by. It's like the MC Hammer song, do not pass me by. Tell us exactly why you feel that way. That must mean that you're very bullish, at least on certain equities.
We are bullish on specific names. Here we are in September. It's probably a good time for some pullback. But we've been doing our homework over the summer and looking at companies in technology that we think have a really good secular growth trend. One name I'll give you is Ruckus Wireless. It's a play on the Wi-Fi for carrier and enterprise class deployments. The Apple phone is going to be announced next week. There's going to be just more capacity that needs to be taken off the systems, and Wi-Fi is going to benefit from that. One other name that we're really excited about is Air Lease. It's an international airline leasing company. They're a great management team of airline assets. And from the global perspective, air travel is only going to continue to grow as the world develops, even in the emerging markets.
Hey, Dan, let's talk about the Fed for a second. A lot of people are afraid of what's going to happen when the rates go up. We know they're going up. The only question is how soon, whether it's the end of this year, the beginning of next year, the middle of next year. You think that when the rates go up, it might be good for stocks. How so?
Most certainly. If you look at the past two recoveries we've seen, and it even goes further back than that, when rates initially start going up, so does the stock market. And the reason is because the Fed feels confident the economy can do things on its own, and it's propelling. A stronger economy means stronger corporate profits. Stronger corporate profits mean a stronger stock market. That's going to happen again.
And Ashley, you got the front row seat to the stock market today. It looked extremely strong. In fact,
it did.
Watching it today, we saw records blown through, and I'm talking intraday. Those are harder to beat. Yeah. Intraday records. This is the third day in a row that the S&P blew through records and then ended lower. The Dow struggled too, made a go of it at the end. But why do you think that is?
Well, I asked some of the traders here, what's going on? Why are we seeing a bit of an afternoon slide? They said three things. We had some perhaps hawkish comments from Cleveland Federal Reserve President Loretta Mester. That didn't help. And also a lot of talk about the big jobs report tomorrow. And if we get a better number, if it is very strong, then it's getting back to those days, remember, when good news is bad news for stocks and interest rates could be rising sooner rather than later. And then also there's been talk of just some tiredness. These stocks have had a really nice run, up 4 straight weeks. maybe a bit of fatigue setting in, but certainly a lot of talk about the big jobs number tomorrow.
Tom Lydon, we had the NASDAQ settling down more than any of the indexes that we showed you earlier. You're in favor of buying into the three Qs, sort of a general fund with all the NASDAQ stocks. Is now the time to buy in now that it's slack, or would you let it slack a little further before you get in?
I wouldn't wait. Those people that have waited for the big pullback have been disappointed because we haven't seen it, David. So the QQQs represents the NASDAQ 100. We've had a lot of talk about Apple and the new iPhone that'll be coming out a little bigger for those of us who need our cheaters, right? And then also we've had a lot of discussion about Tesla.
Hold on a second. You mentioned Apple. I got to ask, are you concerned that maybe Samsung is pulling ahead? I mean, that's what's cut into its profits over, or at least its market cap over the past couple of days.
Well, it has, but it's got such a wide competitive moat, David, especially here in the U.S. I think we're going to continue to see better numbers out of Apple, and also talking about Tesla with the news today about them with their gigaplant in Nevada. They're also a component of the NASDAQ 100. So that's important to diversify rather than picking individual stocks. Grab an ETF that is technology diversified. And then finally, the Crane Shares China Internet ETF is going to be one of the first ETFs to have Alibaba in it as one of its components when it does go public, hopefully within the next 3 weeks.
Oh.
So there's an opportunity there as well.
Okay, and that would be, we didn't show it at that point. Oh, actually we did, the QUEB, Crane Shares, China Internet Fund. So Alibaba will get in there. That's a way to play Alibaba. You know, I think Chris might take umbrage at what you said, where don't try and pick the winners. You've got two names, Chris. In fact, we just had Royal Caribbean on, and they've got this totally connected ship. You like Ruckus Wireless. Tell us why. What is it about that particular company?
Well, again, Ruckus is a Wi-Fi play for enterprise and carrier class. And as the systems for LTE and 3G systems, they need to offload. And this company allows the carriers to take that off. And one thing with the iPhone that's coming out is the 802.11 AC chip, which is a much better use of Wi-Fi. So you have to upgrade the entire system along with the devices. So we're going to see, hopefully, a lot of sales in that area.
Good stuff. Tom Lydon, Chris Retzler, Ashley Webster, and Dan Stesich. We're going to come back to you after the break. Thanks very much, guys.